All right, we're here. We're back, everybody. Welcome. We are here for one of your questions about work, and we're going to be talking about things that relate to VCs and particularly people starting venture funds this week. It does seem like a lot of great founders who I know, instead of going to start another company, they go start a fund. And we will leave our commentary about the desirability of that out. If for folks who don't know, I'm Roy. I invest in the future of work, and I'm here with Mac, who is one of my favorite new fund managers who I've been getting to know slowly over the course of the last few months. And so, Mac, the question we have today. So let's say I'm a new fund manager. What is a thesis? Do I need one? How do I develop one? Like, what is the role of having a thesis in having a new fund?
A thesis is essentially your guiding light and your guiding principle of your fund. So first and foremost, yes, you need a thesis, right? The thesis is basically you saying, I have a strategy where I believe I can create returns for my LPs, and your thesis is that strategy, right? This is what's going to be the thing that you're going to convince people is why you can make money investing in companies that fit this overall ethos, right? I think sometimes fund managers get confused and they just want a thesis to be, well, these are the things I like. This is the trend.
Well, their areas are like fintech plus blockchain plus something. I mean, I'm intentionally making fun of blockchain, but like basically you're talking about they do like a greatest hits of topic areas that they're
right. It's like these greatest hits of topic areas. It's like, okay, well now once you come to that, you then need to be able to explain how those topics lead to oversized returns. Because at the end of the day, that's what we're here for.
Yeah, and so I mean, the examples I think of when you say that is like all these people said like, my fund is about ed tech and healthcare, and then their first investment is some productivity tool. They're like, oh yeah, and good deals. I also do good deals, and it's like, okay, so you're describing a view of a thesis as something more expansive, which is basically your strategy for why you think you can beat the market. And so in your case, if you don't mind me asking about Rare Breed, like what is when somebody says, what's your thesis, what do you tell them?
Well, first and foremost, since we mentioned Rare Breed, we are currently in the process of raising a $10 million fund. Anybody who's interested in being an LP, our minimum check size is $10K. You go to rarebreed.vc and click the button to become an LP. We're under 506C designation, so I can talk about this publicly. Just got to get that out there whenever I get the chance. So our thesis is really multi-layered, right? So, and again, it's the strategy. We invest in companies primarily outside the major tech hubs, outside of Silicon Valley, New York, and Massachusetts. We still will opportunistically participate in companies in those areas, but that's not where a bulk of the deal flow will come from. But it's always important for me to say that, because when I do a deal that is in New York, I don't want an LP to come to me and be like, well, you told me that's not what you do. Well, no, this is the strategy. I need to make sure I'm very clear and people know where the money's going towards, right? We also are looking to do, our target check size is 250,000, which means for pre-seed, it's larger than what you typically see at pre-seed, but standard for seed. This is how we spread out our risk. We do 250. That is what we're going for. And because of that, in a $10 million fund, doing 250 in most of your checks, you're going to have a slightly more concentrated portfolio than you typically see at pre-seed and seed. Most pre-seed to seed funds are going to do somewhere in the neighborhood of 40 to 60 deals. We're probably going to do closer to 30, maybe a little less, right? So now we're getting more into it. We're industry agnostic, but we don't do life sciences. We'll do just about anything else, but we won't do life sciences. So you're not going to see me investing in therapeutic. And if I do, you better make sure that I talk to my LPs before I do it, because I'm selling you on the strategy.
So far off.
Right.
Yeah, I find that, it often plays the role for others. We have one LP, so tough talk from me on this, but of giving them clarity about what they're getting, but also for founders too. So I know, should I pitch this guy or not? And what one person told me, I was very skeptical about the need for a thesis in the beginning, because I had the mistaken idea in my head that a thesis is, here are the ideas we have about which startups are going to work that we want to invest against. And he said, no, you need it because you need a reason to tell people no. And it is just honest to it. And that's where we started investing in the future work, because we realized that's the area that we know. So one thing that I see is a lot of people who start investing, it's like, well, they have some relationships, they have some prior experience, they're going to go with it. And then they kind of try to map a thesis onto what it is they're already doing versus beginning with one. How did you develop that was going to be your thesis of where geographically and that portfolio construction and all that stuff?
So for me, was that I got lucky. I got to develop my thesis while working at a fund. So I was running a fund for the state of Maryland.
Right.
We started this, it's called the Builder Fund. It's a pre-seed fund specifically for underrepresented founders. And so as I was thinking about, okay, one day I'm going to start a fund. What do I want my thesis to be? I took a look at the companies we were already funding. I said, okay, which companies are doing the best and which companies get me the most excited and why? And it came back to companies that were around who had a really strong customer acquisition strategy or unique customer acquisition strategy. And then companies that were building physical products and markets that lacked innovation for 10 or more years. So like we're industry agnostic, but those are the two things that we look for where, to your point, this is how you get to a no. Like if you come to me and you have a product, but you don't have a clear go-to-market strategy, it's a no. Right. If you're making a physical product, but it's just like incremental or something that's already been innovated on in the last, 5 years, it's a no. Right. And so for me, I was able to build my thesis because I was already at a fund. So it made it easier for me. So, it's a little harder for me to give advice.
You just described kind of post hoc what you had been doing. And, the other thing I'd just say about my observation, both as a GP, as a VC, and as an LP occasionally is, which we don't do that much of anymore, as you know, but is the following, which is your thesis can describe the terrain that you could traverse, but still within that, you have to, there's not infinite, but there are probably thousands of companies that are a thesis fit for Rare Breed. And so then ultimately the LP is still buying your judgment. I don't want to call it taste because it's more than just taste. It's your discernment about what you want to invest in. All right, let me ask you one more question before we run out of time.
Okay.
If you could go back to when you started to be a VC and whisper something in your own ear that you wish you had known, what would it be?
There's no way to be perfect, and that's okay. Most of the companies you're going to invest in will never return capital. And so remember that every company you invest in has to have the potential to give to outsized returns. The ideas of hitting singles and doubles doesn't really work. Like the power law is undefeated. Like power law is just undefeated, right? So you have to know, like, hey, that company that you really love, that you think is going to be the home run, be comfortable knowing that it might not be.
Totally.
And like that was like, you're not a real VC or real angel investor until you've had a couple losses.
Yeah, I think that's really well put.
I'll give a story of like one of my favorites. It's a company called JavaZen. They basically put matcha and coffee together so that you could get the energy that you would get for coffee without the crash like you get for matcha. It was an amazing product. I had several friends of mine who actually gave up coffee to only use this product, right? Huh. It's amazing. And they created a single serve brew bag that was really innovative and unique, and it was really cool. And so we went all in on it. And so we know sometimes, founders are doing well, so you have to let them run off and do their own thing. And then a couple months down the line, I get an email saying the CEO was leaving the company and taking a job in Houston, and that the CMO was taking over CEO. And I'm like, hold on, fellas, let's get on the call. What's going on?
Yeah, seriously.
And they're like, yeah, so we spent a bunch of money during R&D. And so, we started to run out of cash and we couldn't fulfill a $400,000 order that we needed for Whole Foods. And so we were trying to figure it out ourselves. And, we kind of fell into some debt. I was like, how long have you known you had some money issues? And it's like, oh, it's been like 3 or 4 months. But, we figured we could figure it out. It's like, no, the moment you realize that something could be going wrong is when you call me so I can help you. By the time they told me what was wrong, they were too far gone for us to get them the money, because we could have found the money. You got a $400,000 purchase order for Whole Foods. We can figure that out. But now that you're already in debt, we can't. And so this company died, not because there was anything wrong with the company, but because the founders were too scared to admit that they had made some mistakes.
It's a shame. I mean, it's definitely one of those things where I think a hard thing in our lives doing startup stuff, which in general is like what a blessed profession to get to do, is many of us, the way we got here, and I don't know if this is true for you, but it is for me, we got here by like consistently proving ourselves in one way or another. And one of the lessons you learn is in doing that is I should try to get everything right. Like, and this is why I say school is terrible preparation for startup life, maybe for life generally, because in school, it's like you get a test, you got to get all the questions right. And in startup life, you don't. You just have to know when there's one that's going really wrong that could kill you and focus on that one and exclude everything else, but pay attention to it. And I don't know. It's just one of these endless mysteries of searching for the return. I saw somebody over the weekend wrote VCs have gone from chasing $1 billion outcomes to $10 billion outcomes to $100 billion outcomes. And the power law just keeps getting more powerful.
Yeah. I mean, look, the decacorn's the new unicorn. It is what it is.
It is what it is. All right. Well, Mac, I would love to have you on again. I really appreciate that. Not
Anytime
advice,
for you,
one
Roy.
person's perspective. And you're a great presence in our industry. I just really appreciate how generous you've been, especially on Twitter, but elsewhere with your time and attention and energy. And just here's to finding more stuff to do together.
Sounds good, man. Looking forward to it.